$14 trillion is about to come to Bitcoin, but it's from people that you would not expect. Now, this giant market is about to get flipped on its head. But first, before I tell you about who potentially could be buying $14 trillion worth of Bitcoin, let's dive into Bitcoin bonds and how that could potentially play a role on the Fed's balance sheet and much, much more. So let's dive into the optics and how these Bitcoin bonds would work. So Van Eck, Matthew Siegel, friend of the program, put out this great tweet about how these bonds could potentially work here. So the US government would offer 90% government bond plus 10% of Bitcoin purchased with the proceed at the sale. So the sale value would be the $100 redemption and then $90 plus that Bitcoin value. So the investors would receive all the Bitcoin gains up until a maximum annualized year YTM of 4.5% on the purchased value of the bond if Bitcoin gains exceed enough to provide 4.5% to the investor. The government and the Bitbond investors split the remaining gains 50-50. So it seems like a win-win-win here, folks. But on top of that, let's dive in a little bit deeper here, where Justin Belcher, who went through a great thread as to what all we could expect from these Bitcoin bonds. So here's to the basic structure. It's a 10-year bond, 90% with a 4.5 annualized return. After that gains 50-50, after I already kind of said that. Why does this make sense for investors? Convexually, you're trading a modestly lower coupon for a massive upside exposure to Bitcoin. Break even ranges 8 to 17% depending on the coupon. So look at this great thing that they put out here by Van Eck, as always. So 8 to 17% doesn't seem too shabby when Bitcoin and the CAGR of Bitcoin has been leaps and bounds over. We're looking at a 40 to 50% CAGR now. So dropping down to 8 to 17% seems like it would be very useful for all of this. Now, what else do we got here? Below, the break-even investors eat opportunity costs slightly lower than coupon versus plain vanilla treasuries. Above the break-even, we've got 30 to 50% Bitcoin CAGR scenarios yield returns of between 55 to 288%. That ain't too shabby, folks, especially for a bond. So why would the Treasury ever go for this? Math. Just like my friend Greg Foss always says, it's just math, folks. So with these bit bonds, the borrowing of 4% Treasury yields. So this is a brilliant financial head for the Treasury. Worst case is they lock in cheaper financing. Best case, the Treasury accumulates significant Bitcoins holding at a zero incremental political risk. And on top of that, what else do? They find a tax-friendly strategy for the United States to stack Bitcoin. Now, who are the world's largest bondholders? Right? It's interesting, right? If you break down the bond market, the global bond market is absolutely massive. We've got $128 trillion worth of the bond market in the United States, but the biggest bondholders are sovereign wealth funds, which the United States wants to develop, are insurance companies, and central banks. So we could have a scenario here where Jerome Powell and the Fed, although he's been discrediting Bitcoin this entire time, Christine Lagarde has been discrediting Bitcoin. If they want to hold United States bonds and help scoop up government debt for the United States in order to keep the United States as the global reserve currency, the US dollar as a global reserve currency, keep the hamster wheel going, you got to buy some Bitcoin. You got to have some exposure to Bitcoin. Now, wouldn't that be something here where we could have the central bankers actually start to go towards Bitcoin simply because of the bonds? So this $14 trillion proposal would offset, or this proposal would offset 14 trillion in US debt. And it would be about only with 10% exposure to Bitcoin. So really not that much. 90% bond, 10% Bitcoin. Seems to make a lot of sense right here, right? Because it would be a hybrid DEX instrument combining US Treasuries with Bitcoin exposure as a novel strategy for managing the government's looming $14 trillion refinancing requirement. The concept was presented at the Strategic Bitcoin Reserve Summit, aims to add sovereign funding and a demand for inflation protection. So these 10-year security, 90% traditional, and 10% Bitcoin can be absolutely massive. And what we're running into now, folks, is that in the first time in history, we had Japan last year sell off government bonds. We had a lot of different people start to sell off bonds. We had potentially the death of the 60-40 portfolio. I don't know about you guys, but if you are a young individual, say around 30, younger, or maybe just a tad older, why in the hell would you hold 10-year bonds when they return 3 to 4%? When you know you should be beating that in the stock market? Well, not so fast, my friend. If those bonds now contain Bitcoin and have some sort of exposure to Bitcoin, well, that 60-40 portfolio could be 60-40 as well, but then you have exposure to Bitcoin. So that 40 isn't just dragging you down. And then we have insurance companies, of course. We've got, pension funds. We've got sovereign wealth funds that have large exposure to bonds. And then we have the central banks, which is a unique wrinkle in all of this, now actually buying Bitcoin, or at least having to hold some sort of Bitcoin related structure on their balance sheet. Well, then we've got the game theory really playing out here. We've got everybody jumping on board as to why this $14 trillion can start to come towards Bitcoin. The debt of this $14 trillion can start to really move towards it. Right? So the U.S. policy proposal calls on the Treasury to issue $2 trillion in Bitcoin enhanced bonds to offset the debt. This was just a couple weeks ago. Their aim is that they could allocate $200 billion to Bitcoin purchases through $2 trillion. Let's make this bigger for you guys. So this would all happen very quickly, where the U.S. government would start to buy up Bitcoin at rates we've never seen before. The bond structure, labeled the B bonds, like the Bitcoin B, I love it, is it designed to refinance $14 trillion of federal debt maturing over the next 3 years. So that $14 trillion in debt that we're all worried about, and that Trump is seemingly tank the market, and I did a live stream on that previously, seemingly tanking the market in order to, get that refinance debt a little bit lower at an interest rate, a little bit lower than what it's currently at. We could see that now start to shift into Bitcoin in order to get people to buy Bitcoin more, right? Have more exposure to it, but also to keep their purchasing power. And I think that is the big player here. That's what we're really looking at, right? The lower rates to get Bitcoin exposure. They would offer a 1% annual interest rate, well below the current 10-year Treasury yield of approximately 4.5%. In exchange for accepting lower fixed returns, investors would gain exposure to a Bitcoin-linked upside through a structured payout bond maturity. And not only that, right? 3 years. They're saying Bitcoin bonds could be the next thing for long-term gains as well. So this would absolutely flip a market worth trillions of dollars on its head, right? I showed you guys this earlier. The global bond market is $130 trillion, right? That's trillion. I usually say billion like Billy the Goat. I need to come up with something for T, the trill. Long live the trill, baby. But we're seeing this, right? these bond markets, the bond issuance, you're seeing the trend. They're issuing more and more and more and more bonds. Why are they doing that? Well, the rat race is continuing to skyrocket. Skyrocket in flight. Like, look at this thing. This is insane. This is some afternoon delight if I've ever seen one. Those big green candles we got going on here. Anyway, let's not get distracted. Let's go back to the long-term returns that we've got here. Traditional bonds currently offer modest returns. In contrast, the Bitcoin bonds can provide higher yields. Yeah, no shit, Sherlock. Everybody's thinking this, right? What's a market that really needs to be flipped on its head? It's the bond market. It's obvious. Everybody's been moving far, far away from Bitcoin or from bonds in general. Well, if you add Bitcoin to them, maybe that's going to be enticing to some people. I mean, hell, it would entice me when we start to see stuff like this, right? The U.S. bond market is facing a looming crisis. By early 25, the national debt has skyrocketed to $36 trillion from the 31.4 debt ceiling. The solution to reduce the record-breaking debt would be issuing these bonds. So why don't we get the smart people in the building to go into Donnie T's ear and whisper this, hey, man, let's get some Bitcoin bonds going. We can pay off the debt. So not only would we do that, we'd get Doge breaking down the government spending. We get the bonds to help pay off the debt. Maybe, just maybe, would we quickly start to get into a positive? And then that's when we get what Trump really wants. What Trump really wants is to have a sovereign wealth fund. So he would be able to create that sovereign wealth fund after getting those Bitcoin bonds. We've got my man Bobo in the chat. I'm not going to say this because we're on YouTube, but you're always commenting on that. I always appreciate the comments, no matter what they're saying. So we see we've got a little over 100 of you in the chat on both Twitter and YouTube. You guys blow up this chat. I'm going to give you guys some free sats in a minute once we continue to go over these Bitcoin Treasury bonds. So get active in that chat, guys, so we can see what all is going on here, because Bitcoin enhanced Treasury bonds, an idea whose time has come. Matthew Pines, also friend of the program, has been writing about this, right? So a lot of very smart people have been proposing this as an idea, are proposing this as something that is going on here, right? The U.S. has faced an unprecedented fiscal challenge with $9.3 trillion of federal debt, with at 4.5% right now, right? So they want to get that rate down. They want to do it as quickly as possible. So the Bit Bonds framework would reduce the interest rate burden on Treasury bonds, generating immediate fiscal relief. Let's repeat that. Generating immediate fiscal relief. Welcome, Morgan. Activating now on X. We've got create a tax advantage savings for American families that provides both security and growth potential. I missed this one. Expanding the strategic Bitcoin reserve at no additional cost to the taxpayer. This is one thing that they've been looking for the entire time, right? It might be tough for you guys to see. Maybe I'll zoom in a little bit. No additional cost for the taxpayer, rapidly building their national Bitcoin holdings and the develop of viable pathways to defease a substantial portion of federal debt over time through asset appreciation rather than increased taxation or reduced spending. So this is something that could potentially start to see some benefits here, right? So if you guys haven't already, smash the like button wherever you're watching, whether on X or YouTube, and then smash the subscribe button with the bell notification so you guys know when I am going live, because I've got some wishing well tokens that I want to give to you guys. Stat. Bitcoin Well is the best place to buy Bitcoin because they are all about self-custody. So we're talking about Bitcoin bonds and some of these other ways to hold Bitcoin. Look, and duality is more money that gets pumped into Bitcoin, higher it's going to go. The number go up technology is next to none. But That doesn't mean you're safe. Not your keys, not your coins. My last name is Keys, right? So if I'm not yours, you don't have my Bitcoin. Wait, let's back it up. Let's delete that from the record just in case I get married. Maybe I hide it somewhere. I don't know. Anyway, long story short, self-custody is the way to go, folks. And I'm going to give you guys some wishing well tokens. Every time you buy Bitcoin at the Bitcoin Well, you get wishing well tokens. They've got DCA. So I'm looking at you guys right now. DCA everything. Start setting it up. And now here you go. Wishing well token going in. What do you got? Another 210 sats straight to your dome piece. So go ahead and scan that as quickly as possible. Scoop up those sats from Bitcoin Well, because when you go to bitcoinwell.com/green candle, you can set up your own Bitcoin Well account and then buy Bitcoin, get it sent directly to cold storage. And on top of that, if you've got a big bag, you're looking to drop 50K plus. Look, I wish I had it. I would be doing that right now too. Scroll a little bit down, click this button, book a call with a specialist, and go to their OTC desk because they've got the best white glove service. They will help you get it all set up. And on top of that, I've got Bitbox, who's also helping me run the show here, where they've got the best and easiest way to store Bitcoin. I prefer the Bitcoin only edition. Do it in cold storage. They've even got punch plates where you could stamp your seed right into it as well. So go ahead and buy that. Use promo code Green Candle. You'll get 5% off your entire order, and you'll have the peace of mind where you're saving your Bitcoin and storing it in the most secure way possible. DCAing on Bitcoin Well, getting it sent directly to your cold storage wallet, and then you could look at it with your Bitbox. All because we've got potentially $14 trillion getting rushed into Bitcoin very, very soon, folks, because of what the man, the myth, the legend, Matthew Siegel, is lining out here. And it's genius, if we're being honest with you. It makes sense. The math adds up. The math is mathin' in this scenario. So for that, we can keep, the smart people in the Oval Office. We could give them a little bit more time to sleep at night if we continue to do that, right? It's absolutely genius. Morgan's saying it in the chat. It's genius. I agree. It is potentially one of the smartest financial tools that we've seen to date. I mean, the two smart financial tools that we've seen might be strategy, just doing their MicroStrategy flywheel. And for those of you that don't know that, I talk about that ad nauseum on many of these live streams. And the other is this Bitcoin bonds. I think if you're a corporation or government, everybody's going to be looking at what is being lined out here by VanEck, and they're going to be trying to keep as much Bitcoin as possible. So this is going to continue to see this rise up. We're going to see more and more access to Bitcoin. And with more access, that means more money, right? Bitcoin is going to have massive amounts of pension funds now getting into Bitcoin once these Bit bonds are launched. If they get launched, we're going to see insurance companies, sovereign wealth funds, pension funds, and on top of it, central banks actually having to buy Bitcoin. Well, that's going to start the never-ending cycle, folks. So as I said before, smoke the like Cheech and Chong. Hit subscribe with the bell notification so you know when I go live and you can get those free sats. Tell a friend to tell a friend. And thank you guys all for joining on this great live stream.